Hi guys, welcome back to the channel. Um, this is a really difficult one to make because we are currently in a drawdown that I think was warranted. I think a drawdown that was coming um, due to the fact that it's a mental game. Trading is 90% mental, 10% um, technical. So yeah, this is the current state of the account. We are down in the last 2 to 3 days. 19 to 21 last 48 hours, we're down about 4R, with the only saving grace being this 1.5 hour trade that we took, um, I think like 2 days ago. So, yeah, I'm just going to walk you through the setups that I've had recently. Um, I decided that I'm going to go and start doing rules based trading so that I'm not in my head too much because I think one of the things that I struggled with was um, letting my profits run. So when the market is doing this, there's no reason for you to exit at this point in fear that a market will come all the way back down here. So many times I've let winners um stop me out at break even, then move in my favor, or as soon as they make a move lower against my position, for example, if you're short, I decide to exit here only for it to move in my favor. So that's one of the reasons why I've decided to do rules based trading. The other one, of course, is the fact that rules based trading makes it incredibly easy to identify whether you need to be in a position and you need to not be in a position. So that's what I'm doing. So I'll just walk you through some of the charts that we had today. So New York AM session provided some really, really good opportunities today. So one of the first ones was, I think, on gold that I saw. This was New York AM session. Um, and as you can see, the new rules based strategy that I have involves essentially four rules. It involves a break of market structure, which we had at this level here. It involves an order block. So the last candle, effectively, the last two or three candles um, that form price moving in the opposite direction. So in this instance, it was this level here. Um, you could count that as an OB. And then a fair value gap with a wick test. So the fair value gap has to be in there if it's a really strong signal. Um, and then so you're looking at a fair value gap and then a wick test. The wick test is the final piece of the puzzle because that's where you put your stop and that's where you put your target. So that's where obviously the limit of that's where the limit is placed. So as you can see, we first had an initial move lower on the 15 minute, made this low here, and then retraced up into this this order block into the fair value gap. Stops entry would have been here with a target there, and then this would have hit a 1 to 2, 1 to 3, and even a 1 to 4. So this is the type of mechanical strategy system that I would like to do. And of course, this is an example of one trade. I can show you 3 or 4 examples of the same thing just in this chart alone, with one potentially forming here. So let's have a look at another one. So this is another one here. You've got a break of market structure to the downside at this level here. Market lower low, lower close is the break of market structure. You've got to move back down, back up into an order block, which is here. So the high of this candle forms the OB, right? And then you've got in here, you've got a tiny little slither of a fair value gap, but a fair value gap nonetheless. And then you've got a move into what I would call, well, the fair value gap is really tiny, but you get the idea. That is a fair value gap just in there. And then you'd be putting your stop, your limit somewhere inside this box. So at this period, it was just this the candle wick there. If you had entered on the candle wick on this instance, you would have been tagged in right as this candle was making its open. I was sorry, it was making its close. You would have had a bit of drawdown, a bit of heat, and then the market would have rolled back down in your favor. So if your stops are above here, rest assured, if the market is moving lower, then this is the opportune moment to enter. And then if you if you scroll down into the 5 minute, you can actually see that this position lines up perfectly with the 5 minute variation of the exact same thing. You've got an order block here, right? These two candles form an OB. You've got your fair value gap, which extends, now goes from here all the way back down to here. That extends. And you've got your wick test entry, which instead of you entering here, you enter just above the highs. You would have got tagged in, very minimal drawdown, almost none, and the market moves in your favor, right? So that's an example of a trade that I want to start taking more and more and more, because it appeared on the US session. It appeared on gold. It appeared on silver. So on silver, this is the exact move here. So you got a break of market structure to the downside, another break of market structure to the downside. Any retracement, you're looking for a fair value gap to form with the retracement, and then you're looking for an OB, which in this instance was here, and the last wick, so the bottom wick there, that is your entry. Stops above the high, mechanical. It gives you 1 to 2, 1 to 1s, 1 to 2s, at least almost every opportunity. There are times when it will fail. And the funniest thing is the times that I did enter were the times that it failed. So the losses that you see were basically on this candle here, where there was a break of market structure to the downside. So if you imagine we're making higher highs, higher lows, this break of market structure here was my opportunity to enter. So I entered thinking that as London session opened, that we would probably get a retracement of this level. we did. We did get a retracement of that level. And so there was an OB here. And then the market just came in and took me out. But I then flipped the other way around. I went the other side. So I looked at this level, this high being formed, the break of the market structure here, and I put my stop. I put my limit at this level here, because I was targeting that sort of flat bottom there. I thought the market would revisit it, and I think it did, obviously. Um, and it was a bit of a winning trade for a little bit before 9 a.m. came in, and the market just started going lower. So obviously, on this instance, you're looking at this sort of move higher. So this was a little bit of a fake out, because the market moved counter trend, but it was still actually in a bullish market. So you got to be wary of that. So I took 2 losses there. There were some other losses that I'd taken, basically trying to find a winner to pass my challenge, which I didn't do. So now I'm back looking for yet more opportunities to get this market back, to get this account back up. So yeah, unfortunately, that's the case. We are where we are. Really, drawdowns are expected. I mean, I was on a 4-win streak in the last 3 days. I'm in a 4 losing streak. The last week I had such a good week because oh, actually, yeah, from the 19th to the 21th is the last week. So if we just go to last 2 weeks, maybe we'll just go the last 2 weeks, or the last month. I was on a 4-win streak. I'd won 2R here, 2R here, 1.5R here, 1R there. Then had a 1R loser, then had a 1.5R winner. And since then, I've had I've had that. So I've had pockets where you lose 3 times, you've got one break even, and you only win 1 or 2R. Um, I've had periods where I've had huge losses, or basically a run of a string of losers in a row, which I'm getting used to. Whereas when the wins come, they are slightly bigger. I mean, this was the biggest win that I had so far, and I really had to hold on to the winner. So yeah, and obviously when I started the account, I was only trading half an hour and losing. So my system follows that you will have strings of winners and strings of losers on an almost continual basis. It's just a case of how can you manage your risk and how can you mitigate the risk of blowing up, basically. But yeah, aside from that, I think there's nothing much to share with you guys. So hopefully my next update will bring something more positive. But thanks very much for listening, guys. See you soon. Bye.